Something strange is happening in the dark corners of the global financial system. While the world is distracted by wars, elections, and stock market rallies, the People's Republic of China is quietly executing the biggest wealth transfer in history. We are talking about secret shipments. We are talking about unmarked planes landing in Beijing. We are talking about a buying spree so aggressive that it has broken the correlation between gold and interest rates. China is hoarding gold, not just a little bit. We are talking about an estimated $500 billion worth of physical metal. They are draining the vaults of London and Switzerland. They are buying it faster than it can be mined. And the terrifying question is, why? Why is the world's second largest economy suddenly terrified of the US dollar? Some experts say they are preparing for a war. Others say they are preparing for the collapse of the American economy. Today, we uncover the truth behind the great gold rush of the 21st century. Welcome back to George Vance Live. We are the channel that digs deep into the stories that your wallet needs to hear, but the mainstream news won't tell you. Today, we are investigating a mystery that could determine the value of your savings for the next 20 years. We are looking at the gold pivot. Why is China dumping US debt to buy yellow metal? Is the dollar going to zero? We have done the research, and the answer might shock you. Before we unlock the vault, do me a huge favor. Go ahead and hit that subscribe button and ring the bell right now. We are building a community of critical thinkers here, and your support helps us keep these investigations going. It takes 1 second, and it ensures you don't miss the next big update. Now let's follow the money. To understand this story, we first have to look at the numbers. But here's the catch. You can't trust the official numbers. The People's Bank of China, their central bank, releases a report every month saying how much gold they have. For a long time, that number stayed flat. Then, starting a couple of years ago, they started reporting small, steady increases. They admit to holding about 2,200 tons of gold. But here on George Vance Live, we don't just look at what they say, we look at what they do. When you look at the import data from Hong Kong, the export data from Switzerland, and the mining production within China itself, the math doesn't add up. It doesn't add up at all. China is the world's largest producer of gold. They dig it up from their own soil. But unlike other countries that export their gold, China keeps every single ounce. On top of that, they are the world's largest importer. Analysts who track the physical movement of bars believe China actually holds closer to 5,000 or even 20,000 tons of gold. That is billions upon billions of dollars of ghost gold. Gold that exists in the vaults, but does not exist on the books. They are hiding the true size of their hoard. Why would a country hide its wealth? You only hide your preparations when you're planning a surprise attack. In this case, it's a financial surprise attack. So why the sudden rush? Why now? Gold has been around for 5,000 years. What changed in the last 2 years? The answer lies in a single date, February 2022, the invasion of Ukraine. When Russian tanks rolled across the border, the United States and Europe responded with a financial nuclear weapon. They froze Russia's foreign reserves. Russia had saved up over $300 billion in US dollars and euros, sitting in Western banks. In a split second, that money was frozen. It became worthless to them. This sent a shockwave through Beijing. President Xi Jinping and the Communist Party looked at that and realized a terrifying truth. If we own US dollars, we don't actually own money. We own a promise from the United States. And if the United States gets angry at us, say over a conflict in Taiwan, they can cancel that promise. That was the wake-up call. The US Treasury bond, which used to be considered the safest asset on earth, became a trap. China realized that holding trillions of dollars was a liability, not a strength. They needed an asset that no government could freeze, an asset that has no counterparty risk, an asset that you can hold in your hand and say, "This is mine." That asset is gold. And that is when the buying spree went from a slow drip to a fire hose. Now, let's look at how they are doing this. It's not just the government buying gold, it is the entire country. China has been encouraging its citizens to buy gold. If you walk into a bank in Shanghai or Shenzhen today, you can buy gold beans, tiny little pieces of gold that weigh 1 gram. Young people in China, who are worried about the economy and the real estate crash, are buying these beans in record numbers. Why does this matter? Because it drains the physical supply from the west to the east. For decades, the price of gold was determined in London and New York. It was a paper market. Traders would bet on the price without ever touching a bar of gold. But China is changing the game. They are using the Shanghai Gold Exchange to demand physical delivery. They don't want a piece of paper that says they own gold. They want the metal. This is causing a massive migration of wealth. The bars are leaving vaults in New York and London. They are being melted down, recast into 1 kilogram bars, which is the Chinese standard, and stored in vaults in Asia. They are physically removing the gold from the Western financial system. This effectively creates a floor price for gold and gives China control over the market. They are taking the poker chips off the table. This gold hoarding is just one piece of a much bigger puzzle. We have to talk about the petrodollar. Since the 1970s, the deal was simple. Saudi Arabia and other oil countries sold their oil exclusively in US dollars. If you wanted oil, you needed dollars. This created a permanent, guaranteed demand for US currency. But China is the world's largest importer of oil, and they are tired of paying a premium to use American money. They have been striking deals with Saudi Arabia, Iran, and Russia to buy oil using the Chinese yuan. But there is a problem. The oil producers, the Saudis, the Iranians, they don't really want to hold Chinese yuan. The yuan is controlled by the government. It's not fully convertible. They don't trust it. So here is the theory that is gaining traction among macroeconomists. China is hoarding gold to make the yuan good as gold. They are effectively saying to the oil producers, accept our yuan for your oil. And if you don't want to keep the yuan, you can immediately swap it for gold on the Shanghai Gold Exchange. This is a backdoor return to the gold standard. It allows countries to bypass the US dollar entirely. They trade oil for yuan and yuan for gold. The dollar is cut out of the loop. If this system takes hold, the demand for the US dollar collapses. And that is the nightmare scenario for the Federal Reserve. We have to look at the American side of this equation too. Why would China feel so confident betting against the dollar right now? Because they can read a balance sheet. Here on George Vance Live, we talk a lot about the US national debt. We are currently adding $1 trillion to the debt every 100 days. It is an exponential curve. The interest payments on our debt are now higher than our defense budget. China knows that this is unsustainable. They know that eventually the US will have only two choices. Choice A, default on the debt, tell the world we can't pay. Or choice B, print money to pay the debt, inflation. Both choices are bad for anyone holding dollars. If the US prints trillions of dollars to pay its bills, the value of each dollar goes down. By moving into gold, China is front-running the inevitable inflation. They are looking at the US government spending like a drunken sailor and saying, we don't want to be the ones holding the bill. They are trading a depreciating asset, the dollar, for an appreciating asset, gold. It's just smart business. We cannot ignore the geopolitical elephant in the room, Taiwan. President Xi has made it very clear that reunification with Taiwan is a priority. Most military analysts believe that if China makes a move on Taiwan, it will happen before 2030. If China invades or blockades Taiwan, the West will hit them with everything they have. Sanctions, trade embargoes, asset freezes. China knows this. They are preparing for an economic blockade. If you're planning to go to war with the owners of the global banking system, the US, you cannot keep your money in their banks. You need a war chest that is independent. That is exactly what this gold hoard is. It is a sanction shield. With $500 billion or $1 trillion in gold, China can still buy food, energy, and raw materials from neutral countries, even if the US cuts them off from the SWIFT banking system. This gold isn't an investment, it is a bunker. So let's bring this home. Why should you, watching this in your living room or on your commute, care about what the Central Bank of China is doing? Because it directly affects your standard of living. For the last 40 years, America has enjoyed a privilege. We could print money without massive inflation because the world absorbed our dollars. China sent us cheap goods and we sent them paper. It kept prices at Walmart low and interest rates on mortgages low. If China stops wanting dollars and starts demanding gold or real assets, that flow reverses. All those dollars come flooding back home. This leads to what economists call secular inflation. It means higher prices for everything, gas, groceries, electronics, for a long time. It means the 2% inflation target is a fantasy. It also means interest rates might have to stay higher for longer. If China isn't buying our treasury bonds, the US government has to pay higher interest rates to attract other buyers. That means higher mortgage rates for you. The era of easy money is ending because the main provider of that easy money, China, has decided to close the tap. This moves us to the next phase, the BRICS currency. We have heard rumors for years, but with China's gold accumulation, it's becoming real. The BRICS bloc, Brazil, Russia, India, China, South Africa, now has a larger GDP than the G7. There is talk of a new trading unit backed by gold. If they launch this, it offers the world a viable alternative to the dollar. Right now, countries use the dollar because there is no other good option. The euro is weak, the yen is weak. But a gold-backed trade note? That is attractive. If 40% of the global population decides to stop using dollars for trade, the value of the dollar on the international market plummets. This is the Triffin dilemma playing out in real time. The US forced the world to use dollars, but now the world is building a lifeboat, and that lifeboat is painted gold. I want to clarify something important. A lot of doom mongers on the internet will tell you the dollar will collapse next Tuesday. That is unlikely. The global financial system is like a supertanker. It takes a long time to turn around. China isn't dumping everything all at once because that would hurt them too. They are executing a slow rug pull. They are selling US Treasuries quietly, month by month, and buying gold quietly, month by month. They are managing the decline. But just because it is slow doesn't mean it isn't fatal. It's like a slow leak in a tire. You can drive for a while, but eventually you are going to be driving on the rim. We are seeing the slow erosion of the dollar's dominance. The percentage of global reserves held in dollars has dropped from 72% to 58% in the last 2 decades. The trend is clear. The destination is zero. This brings us to the most important part of today's video. What do you do? If the second most powerful country in the world is betting against the dollar, should you be betting on it? The billionaires, the central banks, and the smart money are all doing the same thing: diversification. They aren't putting 100% of their wealth in fiat currency. Hard assets. This is why you see wealthy people buying farmland, real estate, and yes, gold and silver. These are assets that cannot be printed. Self-custody. Just like China wants physical possession of their gold, you should consider the counterparty risk of your assets. If the banking system gets rocky, having access to your wealth is key. Debt management. In a high inflation environment, high interest debt is a killer. Paying down variable rate debt should be a priority. You don't have to be a conspiracy theorist to own some gold. You just have to be an observant investor. If the central banks are buying gold at record paces, maybe they know something we don't. Following the smart money usually pays off. To wrap this up, the $500 billion gold hoard in China is a signal. It is a flashing red light on the dashboard of the global economy. It tells us that the era of trust is over. The era of globalization is fracturing. We are moving into a world of every nation for itself. China is building a fortress. They are turning their paper wealth into hard power. They are preparing for a world where the dollar is no longer king. Whether that happens through a war, a trade collapse, or a slow decline, the outcome is the same. The financial map of the world is being redrawn. The US can no longer take its dominance for granted. We are entering a volatile period of history. But here at George Vance Live, we believe that knowledge is power. If you know what is coming, you can prepare for it. This is a developing story. We are going to keep tracking the gold shipments, the Treasury sell-offs, and the BRICS announcements. You need to stay ahead of this. I want to hear from you in the comments. Do you think China is preparing for war, or just protecting themselves from US inflation? And do you own any gold or silver yourself? Let me know your thoughts down below. If this video opened your eyes to what is really going on, please share it. Send it to a friend, put it on Facebook, tweet it out. The algorithm hates this kind of truth, so we rely on you to spread the word. And don't forget to like this video and subscribe to George Vance Live for more deep dives into the future of money. Thanks for watching, stay safe, and keep stacking. I'll see you in the next one.